Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The information shared here is for educational purposes only and is not a recommendation to trade.
Good morning from Chicago traders. It is 7:46 a.m. Chicago time, coming at you on Monday, the 29th of December, 2025. Thanks for joining me. It is the 52nd week of the year. It's over. That's it. 2025 done in the history books. Lots and lots and lots happened this year. Hopefully you had a great break, great holiday last week if you observed. Let's just jump right into it. We'll talk a minute about, let's reduce these, that. Let's take a look at the overall market. Of course, this is kind of bigger than what the screen can handle here, but there you have it. This is the relative indications table. As I said, it's a little bit longer than the screen is tall. And we're seeing, our vols, of course, pretty light. RAN is actually pretty much in line for recent action. We're selling off in the U.S. indices. Europeans are holding up pretty good. But the U.S. is selling off on light volume, but pretty decent range. We're not seeing very much in the Dow currently. The Dow's not playing along. It's only down 18 basis points versus the others. 65, 40 basis points, 36 basis points for the RTY. And other than that, we've got some relatively heavy action in cryptos as we wrap up the year. Some interesting positioning going on in there. We're seeing those products move on pretty good volume. Look at where the Bitcoin is trading. It's got some heavy volume in the futures. On the big, which is 5 tokens per contract, a lot. It's worth whatever, $500,000, and versus the MBT, which is at 161% of volume. But in either case, those two have pretty decent action. This morning, we also are seeing Crude pop back up. Crude, man, it's taking everyone for a ride right now. It's really swinging. On Friday, it just tumbled and it went down a slippery slope, as I like to say, pun intended. And then today it's recovering up 2.4%, trading at 58 from about 56. 2.4%. Natural gas also taking a pop, and then we're seeing gold and silver getting hit a little bit. Silver seems to be undergoing some profit taking. Silver is just so far ahead in terms of percent return than a lot of other products. I mean, this is a big product, silver. Remember, gold was at about half its price last year. I think it was around this time of year. It was around 2,400, maybe, close to half. And that's a big product. Okay, on Friday, let's do the recap screen here. This is a freeze frame from Friday. Friday, the main scenario, we found ourselves right in here. And the main scenario is that it is likely to get caught in this choppy back and forth in the red zone. But ultimately, I was looking for it to release to the upside and head towards that red band that you see at around 7,000. That was the primary scenario on Friday. For crude, let's see, for crude, we saw that it was higher, and for crude, what I said right here, crude, even though it was pushing highs into 58, which is where it is currently, for crude, I talked about it coming back and most likely filling in the overnight gap that we saw some real collisions, some liquidity that was very stable at 58 and was willing to take whatever the buyers will grab, and so that kind of played out in crude. Let's look at the ES. This is the ES. This is where we were on Friday. This is Friday's action right here, and then since then we have come off. So let's zoom in so we can get rid of some of the noise here. So these zones, these red zones, are really the areas that I'm expecting the market to respond. The markets to respond. We almost got to the bottom of this band. The bottom of the band is about 69.96, 69.96, and we stopped just short of there at 69.94. Came back off, and then for the rest of the session, we spent, if you look, the profile very thin up top, balanced in the middle, right? And overall, we basically stayed on top of where the prior day's balance is, and then finished below VWAP, below mid, full session VWAP, RTH mid. And then in the overnight session, we have a double TPO high, a weakish high, but since then it has sold off back into the same red zone that we were on Friday on the open. We are back in here chopping around for almost the entire European session was spent right into this red zone, and now we're giving that up. This looks like profit taken to me. The structure below is relatively weak. You can see relatively weak structure here. This profile, hard to, let me highlight it a little bit better. Let's make it a little more opaque. So look at this profile. There's the point of control. There's another distribution, and then it's thin all the way through. So pretty weak structure beneath here, and we've broken down below. This is an important clue here. The expectation that an attempt to push back up into or above the 69.56 area all the way to the full session mid at 65, I'm going to be a seller in that area. So I'm expecting that participants who are heavy in here, this is your overnight point of control right there, heavy participants in this zone, everybody that participated here in RTH and in here in the extended hours on Friday morning, or on Friday morning, all of that is very likely to be resistance, to perform as resistance if we fall back, if we pull back in here. That's a key clue there. And then the target to the downside becomes 69.30 as the key high volume node. You can see there's a high volume node here. There's a high volume node here. And this is just very little right there. And then we have, this MCV-POC, and then we have a smallish high volume node there. So we expect the prices to transition if we do get responsive this morning, because we have 100% short inventory, like maybe 95% or 98% short inventory this morning. Actually, it's 83.5 so far. So the idea is we're likely to respond, and then if we do, then I'm looking for a short to target that 69.30 area. That's really what I'm expecting this morning as a primary place. So let's color these in like we always like to. Green being our most probable scenario, or scenario 1. Open, fall back through, responsive, attempt to push higher, very likely to get stuck at 69.50. So 69.50 all the way up to 65 right in here. Expected resistance. Looking for short setup. So I'm looking for a pullback with a P shape. I'm looking for a spike retest and fail. So a spike up and a lower high for a short. Those are setups. So the idea is to get short. The setup is what triggers the trade. Looking for the short, looking for it to extend the low, and then target 69.30 for consolidation, and then hold steady right in here. That's your primary scenario, and 30 is the objective on the short side. Okay? The secondary scenario, if that does not play out, is going to be the opposite scenario, which is we open up, we test down, we're unable, and then we have a higher low on a short squeeze that gets impulsive. So we will need to see under this scenario, because we're under the full session VWAP, full session mid, we'll call those DGPs, day generated prices, prices or key reference areas that are created from the current auction are called DGPs. Okay, we have to see a strong impulse, meaning somebody really means business, and we're looking for to have a weak pullback. Then we're looking for the squeeze back to get our overnight point of control statistic, which is not so great today. Our overnight point of control statistics, so we'll get that, and then ultimately we're looking for prior settle, a test to prior settle. For it to get back up here, through this mound, through the valley at 69.70 and into settle, that's going to be quite a task for these guys. But it's the end of the year, and so all things are possible. Those are the two key scenarios today for the S&P. Okay, crude, good old crude. Look at this baby, man. This thing, we got responsive just as expected on Friday. We got responsive, and boy, did it fall off. It ended up filling the gap zone that was left behind. And today it is taking back a good chunk right back up to where it started on Friday. Took all of that back. And so crude is still in this wide kind of discovery zone. What we have to pay attention to is where's the high volume, right? Where are the high volumes in the composite? And now we are in this high volume. So despite the movement overnight, despite the pop higher, the aggressive pop higher and everything else, crude is expected to be quite choppy in this zone. We're likely to have a fight right here from the sellers, some protection, right? And we've already got, this looked very weak closing on Friday. It closed basically at the low. Look at where it settled. It settled right there. The low is right there. We had some collisions on that low, but it was also the closing print, and so we were going to get collisions. And so this thing's between a rock and a hard place, and the expectation is it's likely to just struggle and drift right in here. I would expect. Now, I'm not seeing strong collisions on that high, so I cannot assume that the high is done, but I know that it's coming up to this area to the left where there was quite a two-way battle and some pretty good balance achieved. I'm expecting that area to be tough for crude to break out of. Crude today is going to require a lot of commitment. I'm looking for impulses in crude. Otherwise, the choppy grind up is just really an exercise in frustration. Okay, so that's the key scenario for crude. NQ NQ is in this interesting position. Let's look at NQ for a minute here on the composite. NQ is in this kind of triangle right now. Has not reached the apex yet, but overall, you know, it's one-time framing up on the daily, but neutral on the weekly. And overall, it is really chopping around. You could see that volume has just dropped off a fair bit. NQ is tired. It looks tired to me. It looks like it really wants to hang on to these higher prices. We haven't come off all that much from the all-time highs. So they're hanging in there despite the AI scares and the overvaluation of AI stocks and chip stocks and whatnot. It's still hanging on to these higher prices. And so for me, NQ is basically in the same boat as the ES. The ES is a little bit more stable in the way that it's trading. But the NQ is coming off and has pulled back into this middle balance zone right in here. Okay, and then beneath here, there's weak structure right there, and then there's a balance zone that comes in beneath there. So today, the NQ is likely to have a hard time breaking below this box overall. I'm expecting the NQ to continue to squeeze a little bit to the downside, but overall expect it to kind of stabilize and go sideways. Today, not expecting too much. As far as what's on deck for the week, you know, today we have pending home sales at 10, just a half hour after the open. We have crude oil stocks, the EIA coming out today versus Wednesday. And then we have Case-Shiller tomorrow, Chicago PMI tomorrow, the FOMC minutes tomorrow, and then the MBS manufacturing PMI out of China tomorrow evening. And then that puts us into Christmas Eve or New Year's Eve. Initial jobless claims on Wednesday morning, and then things kind of go dead. But remember, Wednesday's a full day of trading. We don't close early on Wednesday. One last thing that I wanted to get to sooner, but there was a fair bit to cover here. What are you focused on? You haven't gone anywhere. You're looking at the screen. What are you focused on this week? If you are really focused on doing better next year, closing out the year strong and doing better next year, then your entire focus should be on what has worked, what has not, what are my demons, like what errors are repeating themselves again and again and again. This is really the week to do this. This is the final week of the year where you have some quiet before the January rush. January essentially acts as the initial balance for the year. And so there's likely to be a lot of positioning. And so I would urge you to spend this week taking notes on or reviewing or planning. Don't spend it staring at the market. The market is not going to be all that great this week. And so just take advantage of the time. You really should identify which of the 6 error states that you keep repeating. What are the trading errors that you keep repeating? Errors will eat your lunch. Errors are the thing that crushes your emotional capital, your confidence, and will keep repeating and repeating. And as long as you're in denial, they'll just keep showing up. The market has a fantastic way, and thank you for those who are putting in where they're from, what city and country you're in. Please put it in there. Errors are the thing that just, the markets are a mirror. It's an accumulative mirror of how we see things and how we act. How disciplined are we? How process-oriented are we? If we are P&L oriented, in other words, if you're one of these guys that's posting on some subreddit, here's a screenshot of an amazing day, and then you're quiet when things aren't going well, and then you have an amazing day and you post a screenshot, be it on Reddit or Twitter or whatever, Instagram. It's going to be very, very tough to do this as a career sustainably. Your focus should be on process, and your focus is, what is the problem with my process? Very blunt, factual. What is the problem with what I'm doing? Because I can tell you there's no guarantee to making money. There is substantial risk of loss in trading futures, but this is doable. This is doable. The problem is that people want to do something and get something back. They want to do something and get something back. So they're very P&L or results oriented. You should be, as somebody aspiring to trade professionally or long term, I'm assuming that's why you're listening to me. You're not listening to some guy with a McLaren behind them trading 20 eval accounts. If you're looking to do this professionally, your focus should be on what are the weaknesses of my process? The Toyota conveyor belt thing. Let me turn up the conveyor belt speed and find out what breaks so I can fix it, versus let me keep slowing it down not to avoid having to deal with problems. Your goal is to be very process oriented, not P&L oriented. So if you have P&L on your screen, you're P&L oriented. If you're checking your P&L after every trade, you're P&L oriented. And that has nothing to do with trading, has nothing to do with the market, has nothing to do with the next trade, has nothing to do with what your bias should be. Focus on the price action, focus on whatever it is you're using, your fibs or averages or whatever, it doesn't matter. I focus on what is the auction doing, how is that represented by the volume and the market profile, what areas is the market struggling with or looking to test, and what's happening in those areas in terms of structure, price structure, and order flow. And I'm going to take a trade that matches my bigger picture auction read, and only in a direction that's justified by that bias. Not flipping and flopping because I lost money on the short, so I'm going to get long. Oh, damn it, the long is not working. Let me get short again. No, identify what the bias is. It's short currently. Until the market says otherwise, I'm just sitting here waiting for some structure to trade where I can identify risk, pinpoint an entry using order flow, and then that's it. That's my part. Kind of like a paramedic. You show up to an emergency, you give the person an IV, you give them oxygen. If you have to resuscitate, whatever. And then once you deliver them to the emergency room, whether they live or die, it's not in my hands anymore. I have followed my training and my process, and I hope for the best, but it's not in my hands anymore. It's kind of the same here. You just follow your process, you let it fly like shooting an arrow. Once you let go, whatever forces act on that arrow to force it to miss your target or to hit a bullseye or whatever, you don't control that. Just let the arrow fly. But with technology, we're able to manage that arrow, and people overmanage that arrow. Okay? So this is the job. And so for you to get good at that, you need to know, what am I doing wrong on a daily basis? And that's what I'm talking about here for the last 6 minutes. What am I doing wrong that contaminates my process? How am I contaminating my process? I'm here, I've deposited money, I've got my platform, I've got my charts the way I like them, I've done the homework, I'm watching this talking head on his trader bite, blah, 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 and then when it comes time to execute, it all gets thrown out and it becomes a random thing. Stop. Okay, so I'm telling you this to help you get to where you want to go, because my objective has been for the last 20 years or whatever it is, engaging with people in trading, is to have an impact on you in some positive way and make you a better trader, right? I love this business. I love trading, and I think it can be done, and I think it is a path to great outcomes for those who actually do the work, not those who are looking for shortcuts and are jumping from strategy to strategy, guru to guru, book to book, platform to platform, tool to tool. Stick with it, master it, then refine. Add or subtract things very, very carefully. Okay? Good luck, and I'll catch you tomorrow morning. I'll be here tomorrow morning. I won't be here Wednesday. Good luck. I'll see you then. Cheers.